Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, rare earths delivering some rare good news through the market turmoil with a new investor confidence in Lynas Corporation thanks to a strong quarter and Japanese demand. We cross direct to Lynas CEO Amanda Lacaze in Kuala Lumpur for the latest on the market and any risk with the new Malaysian government. A week that saw shares slide on Wall Street and a market correction in Australia. So what did investors make of the results of the two big tech giants overnight, Google's Alphabet and also Amazon? All the latest from an investor in both, Clay Carter, Global Investment Specialist at MacroView. And what does the rest of the world make of Australia? Special report on the wonder down under by The Economist, hot off the press. We talked to the author, The Economist's Asia editor, Ed McBride, about the potential and the shoddy politics. Well, yes, it may have been a fairly bloody time on the market in the last day or two, but one business has been cutting through the mayhem. Rare earth miner Lynas Corp was a top performer again today, rising around 4.5% off the back of yesterday's strong quarterly production numbers. Lynas described demand from Japanese customers as absolutely buoyant as China pulls back on production. And as the world's largest rare earth minerals producer, China's slowdown is likely to push up materials prices, which should be another win for Lynas. On the downside, there is still uncertainty around the business thanks to a change in government in Malaysia, the old sovereign risk, and Lynas's Malaysian plant, which refines its ore from Mount Weld in Western Australia, is still facing a looming government review as a result of that change. And that could mean its long-standing tax break may even be coming to an end. So how does the very busy CEO, Amanda Lacaze, see the outlook for the company? Well, she joined me direct from Bloomberg studio in Kuala Lumpur earlier today. Amanda Lacaze, great to see you up there in Kuala Lumpur. Now, in a market that's been very crazy down here on the ASX, it must be nice to have a bit of reprieve for the stock. You're up nearly 5% on a falling market.
Yes, certainly. We were up yesterday and we're up again today, and absolutely delighted that we're turning around from the direction that the graph's been going in for the last few months. Yeah,
it's part of the reason would appear to be this talk of a lot more demand out of Japan, Amanda, for rare earths from you, and in part because of what's going on in China. Is that correct?
I think that the first thing which is really important, I think it's off the back of we had a really good quarterly results announcement yesterday, and it said that despite all of the stuff which is going on around us, we basically haven't taken our eye off the operational bull, not one little bit. Indeed, we implemented a project we called Lynas Next. We set ourselves a target of 600 tonnes of NdPr. We told the market we'd do it in the first quarter of calendar 19, and we hit it for the first time in September. I think on the other side, the Japanese market is very buoyant. I think that it's a little more complex than just anything to do with China. I think the first thing is that we've always had a strong position in the Japanese market. We have developed a really good reputation in terms of the quality of the material that we provide. And the Japanese market itself is very buoyant because the area where magnets are used, automotive, automation, and electronics, are very strong in the Japanese market, and also for what they're providing to companies outside of Japan. So I think that that demand driver is stronger even than the Chinese dynamic, but the rare earths market is always very alert to anything that might be happening in China.
Yeah, well, no, that's right. Now, I was interested to see what you made of this latest report from Adamas Intelligence, quoting the Chinese curtailing production of rare earths to 45,000 tonnes in the second half. Now, is that significant? Because, of course, they are the big producers of rare earths, aren't they?
Yeah, so not really. And they've applied these quotas on a 6-monthly basis, and the first 6 months the quota was up on the previous year, and in the second 6 months it's essentially flat on the previous year, but down on what was the quota in the first 6 months. So sometimes, you know, it's like all these things with numbers and statistics, it depends what you're using as the benchmark. So we would see that there's not really a significant change. There are changes inside China in terms of their continuing focus on improving environmental performance. A lot of the ionic clay facilities in southern China have now been shut down for an extended period of time because that's the one where they actually have the most significant environmental impact. But in terms of the quotas themselves, we're not seeing that as being particularly remarkable.
Right, and at the moment, the rare earths are not included in Donald Trump's war with China, and no doubt for vested interest reasons. Do you see a time when they could be brought in to the China-US trade spat, and what sort of implications would that have for you guys?
Yeah, so it's all quite complicated. One thing which is actually already been passed in the US, legislation has been passed which prohibits the DoD from buying rare earth magnets from one of the 4 non-aligned states, of which China is one of those. So that actually has been passed, although rare earths, rare earth oxides and others are not necessarily part of the tariff framework. But in the US, I think that they see quite clearly that what happens with the DoD often leads what happens in the rest of industry, and we certainly have much greater interest from US firms in supply from us rather than being reliant upon supply from China. I think that our experience in China is that Chinese business people remain very nervous about the US-China relationships.
Yes.
They see it as being volatile and quite unpredictable. And so that certainly is seeping into the sorts of things that Chinese industry is looking to do to protect themselves from what they see could become something which is, you know, much more harmful than it even is today.
Okay. Amanda, as you said, your operational results for the quarter look very strong. The one thing the market is also focused on, of course, is the sovereign risk side, this review that the new Malaysian government is doing of the operations at Lynas. What can you tell us about that?
So I think we were very surprised in the first instance that this came up again after the change of government, because we weren't an election issue. We've been running our business quietly for 6 years, and every single day we try to be an excellent corporate citizen and do the things that the government says matters. 97% of our workforce are Malaysians. We train them, we provide additional skills, we promote them. Our people are very happy working for us, and our absolute focus on everything we do is about being safe and having zero harm. So we were surprised when it came up again, but given that it has, you know, the progress has, you know, sort of meandered a little to get to where we are today. But where we are today is a review committee. It doesn't have politicians on it. It's made up of academics. We believe the minister when she says that the review will be fair, transparent and scientific in nature, and we believe that the academics will approach it with rigour and scientific method. So we've been advised that it's a 6-week process, and I think we're probably a couple of weeks into this review committee's work at this stage.
Yep.
And we're expecting to engage with the review committee in early November.
Right. So
we're
that's when
very
they're
confident in terms of the science.
Yeah, well, they're going to come down, as I understand it. They're going to come down, as I understand it, and look at the main plant, the LAMP in early November, as you say. Now, it's also, as I understand it, you know, January 1 every year, you then get reconfirmation of your ability to function at the plant, and also you've then got issues and ongoing permissions that you have to get for expansion, and you are expanding, aren't you? So are you confident not just in this review but also in your ability to go on expanding up within Malaysia?
Yeah, so I think that as we think about this, and you know me well enough to know I always say I'm a glass half full sort of a chick, and I actually see the review as a great opportunity for us to demonstrate the good things we're doing, the growth, the contribution we make to the economy, alongside the fact that we run a safe operation. In terms of our relationships with the regulators, these have always been strong. Malaysian regulatory authorities are strong, are well resourced and are well skilled. After the change of government, we had a bit of a slowdown in some of the approvals, but I guess when this is the first time it's ever happened in 61 years, you know, people were getting accustomed to how to deal with that. We're now in a position where we're getting what we would regard as our business as usual approvals coming through in good order, and we would hope that once the review is completed, that we just move forward from there.
Right, so you're confident that they will, providing the review goes to plan, that they would be open to further approvals to accommodate your expansion?
I would hope so, yeah. Because it is part of, you know, what Malaysia wants to do. Malaysia needs to grow economically. Malaysia needs this for its people, and I think that it needs good quality foreign direct investment in the country. It doesn't need poor quality investment, but certainly the Pakatan Harapan government has been very clear about the fact that it still welcomes quality foreign direct investors who actually step up to their responsibility as corporate citizens, and yes. I believe that we have an opportunity to prove that. Okay,
just one on the last quarter. You did have some water issues. Now this has been happening a couple of times. What are you going to do about those issues to make sure that they don't continue to be a problem?
Yeah, so the water is quite interesting because, you know, where I live, I have in the house, I have a tank and I have 3 taps actually where it's connected to the mains water. All the rest of it goes into the tank and serves them. So I know the minute we have a water problem because I actually don't have any water in my kitchen. And so these water issues, I think, you know, we finally got to the bottom of it, industry and also the Water Authority, and it has to do with a particular dam wall at the local catchment area. In the Gebeng industrial estate that we're in, there's 10 large companies. Each of us has made a 500 million ringgit contribution, so that's 5 million ringgit contribution to the cost of actually repairing that dam wall, and then the authorities are making a matching, you know, spending the same amount of money. So it's about a 10 million ringgit repair. And as that's been going on, we've now not had any water problems for some time. Okay. But having said that, these things are always an opportunity to find, is there a way we can do things better? So we've identified alternate water sources. We're in the process of building a 3rd water storage pond so that we are less susceptible to variation in water supply. But the most important thing is we sat down and we said, well, do we really need to use so much water? And this is part of our approach to sustainability, to always look at, is there a better way to do it? And so we've implemented processes where now we're going to be using actually 20% less processed water than we had previously.
Okay, all right. Well, finally, I was interested to see that one of the brokers here seemed to think that you'd be okay, even if under the worst scenario that you couldn't continue operating in Malaysia, that you could actually operate as a company and build an alternative plant somewhere else. Do you agree with that? And what's your outlook?
Oh, look, I think that lots of people look at this, and it is true that our value starts under the ground in Mount Weld in Western Australia. And so any change to our operations here in Malaysia doesn't actually change the fact that we have so much of that value sitting there. But we are absolutely committed to Malaysia. It is, when Linus came here originally, and this is still, you know, sort of the pitch, it's a great place to do business. We're in a mature industrial estate. We have access to raw materials. We are close to our markets, and most importantly, we have access to a great workforce. We remain absolutely committed to that. If the review comes out and it says they want to have some changes to what we do, I think the chances, and I don't really spend time speculating on it, well, what if they say shut us down? I really don't think that's a likely outcome. What we're simply saying is, if you want to change the conditions, give us time to adapt. Well, yeah, just give us time to adapt. We can adapt to most things, and we are a lawful company. So I don't think we're going to have, you know, I don't think I'm going to have to get my spanner out and go and pull the plant to pieces to ship it somewhere else. Let's put it that way. But we do need to understand that we have value that comes from both our resource and our mining operations, and we have value which comes from our processing operations here in Malaysia.
Amanda Lacar's terrific to talk to you in KL. Thanks so much for your time.
Thanks, Ticky. Hope to see you soon.
Great Ambassador for Australia. Now, after the break, US third quarter earnings in full swing, and Amazon and Google today somewhat of a disappointment. We'll get the details with Macro Views. Clay Carter next.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Well, a raft of US results coming in, US earnings, of course, at the moment. E-commerce giant Amazon shares extending their losses in after-hours trade after third quarter sales missed forecasts. Now, net sales were up over $56 billion US. Yeah, big numbers, aren't they? From nearly $44 billion a year earlier, falling just short of the $57 billion the street was expecting. Revenue from its Amazon Web Services, the company's fast-growing cloud services business, surged over 45% to $6.68 billion, narrowly edging past estimates. On the flip side, the Google parent company, Alphabet, third quarter earnings actually beat the street, though shares were sold off as well in extended trade, net income rising to over $9 billion. On the revenue side, though, it jumped to over $33.5 billion from the near $28 billion a year earlier, thanks to a spike in online investments. Now, analysts on average has expected just a little bit more, $34 billion, but it wasn't much of a miss. So for more analysis on the two big tech giants, I spoke with Clay Carter from MacroView. Clay Carter, well, what a day to be talking to you. The market seems to be all over the place, but what have the two big results, the FANG results overnight, said about themselves?
Yeah, look, both Amazon and Alphabet reported after the close, and investors were disappointed with some aspects of both reports. The stocks, I mean, Amazon was up 7% roughly in the normal session. I think Alphabet was up about close to 5%. They lost all those gains and a bit more in the aftermarket, but the aftermarket's a bit of an odd place. It's over the counter, not particularly liquid, so we'll see what they do tomorrow. But yeah, I think investors were pretty certain that both companies were going to sort of knock the cover off the ball, and there were a few glitches in the reports, but overall I don't see a particularly big problem with with the results from either company.
Okay, let me drill down. Let's go to Alphabet, which of course is Google. Their earnings, how did their earnings go? How did their net income go?
Okay, they had a huge beat on earnings. They were only looking for $10 and change in earnings. They did over 1306, I think. So a huge beat on earnings. Net income also up, I think, 37% year over year. So a great quarter from a profitability standpoint. So
it was their outlook.
Well, they don't offer guidance as a rule. Amazon does, but I think the thing with Alphabet that disappointed people was their net sales were slightly light, just $500 million or so, very, very small. And this may be due to partner content acquisition costs, hard to say. So that was a bit light on. So investors felt that that the big growth, year-over-year growth, wasn't there when it was slowing a bit.
Yes. Is there any concern around the outlook from the point of view of, say, future regulation risk, or is that not going to play in for a while?
Well, I think that's something that's been around for a long time, and I mean they got the fine from the EU. But I think with the way to look at Alphabet is, for one thing, it's selling at 17 times next year's earnings.
Yes.
Revenues are growing over 20%. Earnings are growing between 25 and 30%. So, at these levels, it's pretty reasonable value. And when you look at Alphabet, it isn't just search and it isn't just YouTube. What it is, it's got a huge AI business within Google that they're going to eventually monetize and that they're using to improve their business processes. You've got Waymo, the self-driving car business, and you've got all this other stuff that they call other, which is the hardware business, which is their cloud business, and it's all doing extremely well.
Well, I was going to ask you about the cloud, because they're obviously going to try and take on, the other clouds, Amazon Web Services, and Microsoft's Azure. This is obviously a very lucrative space if you can get the market share.
Well, right now they're number 3. Amazon Web Services is the 800-pound gorilla, and I think they're pretty well uncatchable. Microsoft's Azure is doing very well. It was up 76% year over year. But what Google has, so they've got, again, it's the AI angle. They're using AI to help people operate in the cloud. And I think that will gain them a competitive advantage over time. So it's a good business for them. They're number 3, but they're trying harder.
Yep. And what do you make of Tim Cook's little shot over the bows at Google and Facebook about precisely this, Google's use of information? They are collectors of information and a real threat to privacy.
Well, I think he has a point, and I think it's something that the Facebooks and the Googles and to a lesser degree the Twitters of the world have to deal with. Exactly what they do, I'm not so sure. Does it impact their business going forward? I think you have to look at the behavior of advertisers. The behavior of advertisers obviously for Google, Alphabet, obviously for Twitter, and obviously for Facebook. And at this point in time, the advertisers haven't pulled back. Facebook maybe, but the other two not so much. So that's something we'll have to watch, no question. And I think it was a valid comment, and that supposedly Apple doesn't do this, but Apple keeps you within the Apple ecosystem pretty tightly.
Yeah, but it's certainly there for Tim Cook at Apple and indeed Satya Nadella at Microsoft to talk their own shop about how much they're on the side of the business of the customer, whereas look out for anybody collecting data. Exactly.
Yeah, it's a valid point. It really is.
Okay. All right. Let's move to Amazon. How did you see Amazon's results compared to what market expectations, Clay?
Well, again, it was a nice. It was a nice beat on the earnings side. What did they do? They did 575. Market was looking for a little over $3. Huge beat. Amazon in the past was criticized for not being particularly profitable given the size of the company, but that represents the 14th straight quarter of profitability. And in 2014, 2015, the shares were languishing around $300 US because they couldn't seem to generate a profit. They were spending too much. Well, now the spending has paid off, and now the stock, of course, is over $1,700 at any rate.
Yeah.
so it was a good earnings result. They had a lot of other things going on in there. Amazon Web Services up 46%.
And that is the bigger part of the business now, isn't it?
It is. It's almost 15% of revenues, and it's hugely profitable. Has huge margins. So that was a positive. Their advertising. Amazon is now the third largest advertiser after Facebook and Google. Advertising business up, up north of 20%.
Right.
A record number in terms of operating income.
So why was the market sort of slightly disappointed? Was it all about the outlook?
Well, again, the sales were just slightly light.
Yes.
But it was their guidance for the fourth quarter, which of course is obviously got to be big for Amazon as a retailer, and their guidance was quite light, and people were surprised about this because they think that the fourth quarter is going to be a blowout. But a few things came out off the earnings call. Is that one thing is they're accounting for their Prime subscribers in a different way, and that's lowered the number somewhat. Another explanation from one of the officials I heard on the call was things happen at the last minute in the fourth quarter. It's very, very hard to forecast. So that forecast is hugely conservative, which I don't have a problem with.
But there was some suggestion as well that maybe shipping costs, labor costs might be larger?
Well, actually shipping costs is now has decreased to something like 22% of sales. Before it was over 30. Right. So that hasn't hurt them. Minimum wage up to $15 an hour. That will be a slight impact. But again, it hasn't affected the number that drops to the bottom line, the earnings number. So I'm comfortable with that. Their international business is not doing that well. It's about 13% of revenues. They're going head to head in India with Flipkart, which is of course Walmart. The Indian festival Diwali may have skewed some of their numbers from there, but international is not doing as well as it should. Yeah. I think it's got roughly a 13 or 14% year-over-year growth rate. It should be growing more. Okay, so those are those two big companies. We've got Alphabet, we've got Amazon. We've also had results come in for both Microsoft and Netflix, which were really impressive, weren't they? Absolutely. Going back to Netflix, they disappointed last quarter with the number of subscribers that weren't even close to estimates. Yes. But they've come back in. They've come back with a very content heavy quarter. And they've brought more subscribers in the door. The domestic and international subscribers were way above estimates. And of course, Netflix has been in the penalty box ever since they disappointed back in mid-year. That stock has had a nice recovery. Not a lot of competition. Obviously, Disney is getting into the space, HBO, Hulu, but Netflix is so far ahead. But in order to keep that advantage, they have to keep spending. So $8 billion a year run rate. Yeah, and Microsoft? Yeah, Microsoft was a very pleasant surprise because literally all of their businesses showed better than expected growth. Office 365, their cloud business, which is Azure, their Windows business looked good. So literally everything, and of course, people worry about Microsoft because it's sort of PC-centric. Yes. But then if you look at Intel's numbers this morning, the chip maker, they're talking about how robust the PC market is on the upgrade cycle. Yeah. So and then you've got things like the Xbox Game Pass subscription service coming on, and that, there's a few other irons in the fire, aren't there, for Microsoft? Exactly. So Microsoft, a great number. The stock sort of went sideways for a decade, but say with Satya Nadella, they're really getting some runs on the board, and of course they're number 2 in the cloud, and they're also got some AI initiatives to help customers there as well. So I'm quite happy with Microsoft. Indeed. So Clay, overall, can you give us a sense because these tech stocks and their performance and their results has played a big part in what's been going on in the market over in the US. Can you give us a sense of how you think the market's going to be driven going forward? Well, I think we'll be higher by the end of the year, but we've had yet another October correction. Of course, we had a correction in February. And tech stocks lead on the way down and tech stocks lead on the way up. And the reason, recently that's the case is that's where the growth is. You've got companies as big as Facebook and Alphabet that are growing, north of 20–25%. You've got Amazon that's growing at 30%, Microsoft at 20%. Smaller tech companies, a lot of them are growing at 25–30, even 40%. Yes. Now, there's no other industry that has that sustainable growth rate at this point in time, at least it's sustainable for the near future. So I think technology shares will continue to lead into the end of the year. I think we'll be higher by the end of the year. We're holders, obviously, of Amazon and Alphabet, Microsoft, and Netflix. Apple we probably missed because the stock's up 30%, but I think Apple's result will be fine. Actually, the new 10 phones are doing well. So yeah, so I still see this is a sector you want to be overweight. The industrials are struggling. Look at Caterpillar's numbers. Problems with tariffs, problems with China. On the other hand, Boeing had pretty good numbers, so that's another benchmark stock that's done well. But yeah, look, in general, those growth rates are not available in any other industry.
Yep.
Big pharma slowed down. Biotech doesn't generate any growth, just losses. So tech is, for now,
yes,
it's the only game in town. And
terrific.
There's really, for Alphabet and Amazon, this isn't really a stumble. Particularly if you look at on the earnings side, they're executing really well to generate that level of earnings, and so far ahead of expectations. So, I'm comfortable with that.
Happy investor. Clay Carter, thank you so much for all your insights. Thanks.
Right, bye now.
After the break, should we be worried about recent political instability in Canberra? Well, we'll talk the findings of a new special international report in today's edition of The Economist with Asia editor Ed McBride next.
This is TICKY on Your Money, covering the big business stories.
Yes, welcome back. Well, it's hot off the press in The Economist magazine. A major news special report on Australia, which praises the resources we have, but wonders what on earth we're doing with our politics. It's always interesting to find out what others think about you, isn't it? This report, I believe, actually makes the front page of The Economist globally, which is a first for Australia. And the author is The Economist's Asia editor, Ed McBride. He joins me now direct from London. Ed McBride, great to talk to you. Well done on this report. Did you find yourself surprised by it all, and are we just lucky, or are we better than that?
Oh, definitely better than that, and yes, it's surprising. Everyone knows that stat about Australia being the country that's gone longest without a recession, 27 years. But when you look deeper at the more of the data and you compare it to other countries, it's still kind of amazing to see just how well Australia has done. And I certainly wouldn't want to take that away. Look at income growth. 4 times faster in Australia than in America over the last couple of decades. Look at the health of the public finances. Australia's debt is a fraction of most other rich countries. So it's still doing amazingly well. So
you're thinking that really by being clever and using, I suppose, the private sector, both in terms of, say, pensions and having compulsory super, those sorts of reforms that went in through the 80s, they were pretty cool to have. But because we've got quite a lot of personal debt, haven't we?
Sure. I mean, there's all kinds of things that you can point to that are weaknesses within the economy. There's no question. But if you were standing in another country, you'd think I'd much rather have Australia's problems than Japan's or Britain's or Italy's. I mean, it really those reforms you mentioned from the 80s, really, early 90s. And as well the sort of fiscal discipline of the decade that followed, that's put Australia in a really strong position compared to its peers around the world.
Right. Well, we've been coasting on that for quite a long time now. There's a lot of concern that we might be sitting on our laurels. One of the issues that you do pick out, well, it's sort of the elephant in the room, really, is that we just don't seem to be able to grasp the, too many metaphors, but grasp the nettle on climate change.
Absolutely. So look at super, at reforms to Medicare, at as I said, the fiscal position. All of that really happened 20, 30 years ago. Yep. And if you look over the past decade and you try and think, well, what's the reform that will really be benefiting from 10 years down the line, 20 years down the line, it's hard to identify anything that looks as significant as what happened 30 years ago in Australia. And climate change is a great example. You know, clearly it's a problem already. Clearly it's hurting the economy already. Clearly it's going to get worse.
It's hurting our prime ministerial record.
Well, it's turfing people out of office, obviously. But you know, Australia hasn't come up with a policy, or at least not stuck to one, despite, you know, wringing its hands over it for the last decade at least, right? So, and you think 20 years from now, we probably will be looking back and thinking, why wasn't something done about that sooner? So yes, the worry is not so much about now. There are small problems with the economy, but on the whole, it seems to be doing very well. The worry is that there isn't the sort of political momentum to keep that going in future.
Yeah. And lastly, one of the things that we always find difficult to think about is things per head of population down here in Australia. And I note that per head of population, obviously carbon-wise, we are terrible. But per head of population, you make some very strong points about immigration and the culture of the country.
Well, Australia, obviously, by its own standards, is going through a debate about immigration that looks as if it's you know, more heated than anything that's happened in the, you know, past 20-30 years. But actually, again, if you compare Australia to Britain, to America, to France, you know, the debates there over immigration are much more vociferous, and the society is much more divided. And sure, on the right wing of the Liberal Party, you hear some people talking about how immigration numbers need to be cut, and how obviously no policy can be too fierce in Australia in terms of people arriving by boat, right? But even so, you know, look at America, you know, build the wall. Australia doesn't have anything like that, and there's actually a really strong consensus behind the idea that immigrants are good for the economy, and that pretty you know, serious immigration, you know, immigration in pretty big numbers, should continue. That's not really questioned by anyone. That's incredible.
Right, okay. Well, as I say, really interesting to talk to somebody who's looking in from outside. So, Ed McBride, thank you very much for joining us.
Thanks for having me.
Right, well, let's go to the US, because the mail bomb scare is continuing over there as authorities intercept yet another package, this time addressed to former Vice President Joe Biden. The item was found at a mailing facility in Delaware and comes after another suspicious package was identified in New York, targeted at a restaurant owned by actor Robert De Niro. The bomb squad carried out a large operation to retrieve the item. Authorities believe the package may have contained an explosive similar to those sent to the CNN office and the residence of former Presidents Barack Obama and Bill Clinton and other prominent politicians, all of them Democrats. White House Press Secretary Sarah Huckabee Sanders has rejected suggestions President Donald Trump is responsible for the numerous bomb scares.
There's a big difference between comments made and actions taken. The president is certainly not responsible for sending suspicious packages to someone, no more than Bernie Sanders was responsible for a supporter of his shooting up a Republican baseball field practice last year.
Well, there's certainly a lot happening at the US in the moment. I caught up with former White House advisor and political commentator Ed Blakely for his thoughts on the pipe bombings and the ongoing investigation around the murdered Saudi journalist Jamal Khashoggi. Ed Blakely, so nice to see you. Now, you're just off a plane from the US. What do you make of the latest news around all these pipe bombs and how it might play into the midterms?
Well, the electorate is in explosive mood now. People are hostile. There's no civil discourse going on. And Trump is moving this up a ratchet. But it may have gone too far. Not by him, but a surrogate, perhaps.
Yeah. But do you think it's the Trump climate?
The Trump climate. It's really the Trump climate. Him talking about slamming a reporter is a good thing. I wish I could punch this person in the mouth. And all this hostile rhetoric goes too far from some of the middle-of-the-road Republicans. They may stay home, particularly women.
Oh, right. So that's very interesting because in other quarters, I read that the blue wave, the Democrat wave, which is supposed to be moving towards as we head towards the midterms in what, just 10 days' time, is not anything like the pace that it was.
Well, that's true, but all waves, you know, top out.
Yes.
And I think this wave has probably reached its highest point. And let's hope that point is high enough to overcome the Republican advantage normally in a midterm. The Democrats don't show up at midterms. They go after presidential elections.
Yeah. We have to remind everybody that this is, it's voluntary voting.
Voluntary voting.
Yeah.
And as a result, the Democrats have to work very hard. But they have been helped mightily. A lot of Republican money has gone into Democratic coffers. And the Democratic candidates this time are middle of the road. So they have a good chance against these Republican candidates. You know, all elections are local. The Democrats have good candidates like Beto O'Rourke and others
down in Texas
that people like.
Right. So what about the pace, though, that the president himself is hitting? I mean, how many venues? How many speeches?
Every day. Every day. It's 3 or 4 a week.
Yeah.
So he has little time to run the United States. Yeah. But there are a lot of Democrats out there. Joe Biden's out there. Obama's out there.
So how do you think this is going to? How do you see the final numbers at this stage?
Well, if I had to make a guess today,
yes,
the Democrats would get the House, and the Republicans would get some more seats in the Senate. And that's just today. 10 days is a long time.
Well, it is when you've got these factors. Well, let's go through them. You've got the caravan of people from Honduras. Now, what message does that send?
Well, that message is one that is very discouraging and disparaging because these refugees are fleeing drug cartels and the instability of their governments. Now, one of the reasons they're fleeing this is because the U.S. has cut off aid to these countries to maintain their police forces. So the U.S. is partially to blame for this. Trump's cut off their aid, people, life in danger, they're fleeing.
But when you see you know, as some of the papers have shown, these walls of people heading towards America, presumably
7,000 people,
yes, that
330 million. Yes, it plays into all the fears.
Yeah.
And Trump is saying there are some people who are very bad people in this group on the basis of nothing. The Democrats have a very difficult issue here. They don't want to play into his hand by saying these people shouldn't be let in, because that means some of their base would say, hold on.
Yep.
They should get a look at, you know, equity. On the other hand, if they don't draw a line, they lose some of the Republicans who would normally vote for them in this midterm who don't like Trump.
Yep.
So this border issue is more than the border. It's about immigrants, period.
Okay, looking overseas and some of the international policies, well, of course, we've had that extraordinary development with Mr. Khashoggi in the Turkish embassy, and now, you know, question about how Donald Trump is going to handle the prince in Saudi Arabia.
Well, he has personal interest in Saudi Arabia, going well beyond his presidential interest.
Okay, so beyond the incredible exports that America has.
Yes, he has personal interests there. So he's trying to protect those personal interests, but he's also trying to play this in as a big export deal. When you start putting up tariffs around the place, you need some place to export your products. And so this is coming from him at a very bad time. What's he done? He said, I'll do whatever the Congress says. That's easy to say.
That's quite clever, isn't it?
Very clever. Yeah, particularly when the Congress is not in session.
Yeah, of course.
So this man doesn't know how to govern. He only knows how to run his kind of personal circus. So he has no position on Khashoggi. He has no real position on anything. But he's scared about the economy. The stock market has been going down and not up.
After the break, the ASX 200 closing flat after yesterday's market sell-off. We'll get a wrap for the week with Adam Dawes from Shaw & Partners next.
Now, back to TICKY.
Well, yes, welcome back. The ASX closing flat today. Gains for healthcare and materials offset by a slide in the energy companies, with the energy index posting its biggest drop in nearly 3 years. Well, it was quite a session, wasn't it? The soft finish for the day follows yesterday's brutal market correction, bringing the ASX 200 down almost 5% for the week. So for a wrap on markets over the week, I spoke with Adam Dawes from Shaw & Partners just after the close. Adam Dawes, what a week.
What a week.
Explain it for us, will you?
It went down.
Yes.
Look, yeah, it's certainly been tough. Investors are definitely nervous. They're definitely unnerved about what's going on in the US, and especially...
But we've been talking about this
happening. Absolutely.
Some sort of correction.
Absolutely, and we're now 10 years into a long cycle of a correction since the last GFC, so it has been talked about. We have been talking about late cycle trading. We've been talking about all these kinds of things. But now it is actually happening.
And the US, you were saying?
Well, the US, you know, it's been a tough one, and midterms, we've got them coming up.
Yes.
I think, you know, the US is certainly playing chicken with China at the moment. Everyone's nervous, and anything that's perhaps got earnings that are coming back, or there's some issues or delays.
So today, our market sort of came back.
Correct, but then fell, and now sort of trying to find a level. So I thought it was a pretty weak rally, to be honest. We all came in with a bit of a skip in our step, saying, like, yep, okay, we're going to take back at least 50, 60, 70 points for what, you know, what our market lost yesterday. But yeah, it was a pretty weak rally, so pretty disappointing.
Now, quite apart from that, AMP over first yesterday, what, down 24 point something percent, and then today down another, what, I don't know, nearly 5 or something?
Yeah. We've been a seller of AMP, and I still feel...
Well, you're part of the problem.
Well, we absolutely are, but we were a seller of $5 versus now $3 and $2, you know. It's still got a lot of trouble. 169 years that they've been in the life insurance business. They got out of that. $3.3 billion they got for that. But you know what they got at the end of that? Around about $700 million to do something with. It's amazing when you sell a business and what you've then got to pay out and all of these kinds of things.
Yeah, because only 1.9 of that was actually cash anyway.
That's right. Yeah. So what they actually got out of this is pretty amazing. There's a lot more to come, I think, for AMP. I still feel I'm looking for an entry point soon. Yes. We've got a price target of $2.30.
Really?
So
right.
you know, it could get down there. But we've still got Royal Commission findings, we've still got breakup, we've still got...
And we've got the outflows and the lack of inflows.
$1.5 billion worth of outflows.
Yes.
Yeah, so it's people don't... And the North platform is the only platform that is actually getting some traction.
People got a lot of faith in Francisco de Ferrero, the new head coming in, do we think?
Well, with the amount of outflows that are going, I suspect not.
Yeah.
You know, I really do. I think it's a business that's in trouble. It's an old world business. And that's what Australia doesn't need. We need some more new world businesses, but AMP really has a lot of work to do.
New world or current world business anyway. HealthScope.
HealthScope.
Yes.
Another bid.
Another bid. They're back. So this is Ben Gray, the private equity BGH, and along with Aussie Super, which is actually on the register.
Yes. So it's a bit interesting that they're coming to the party with that, you know. But I think what's different now is that they've got, I think, a 9%. Ellison Capital have actually said that they will then sell their stake now if there's no higher or competing bid. Yes. So that's a bit different. So you've got
Ben Gray, Mark Delaney and Ashok Jacob all wanting the transaction to go one way, not necessarily on the same side.
Absolutely. Yeah. So, you know, there's a lot of pressure on the board.
To grant due diligence.
Absolutely.
And then...
Yeah, to make it work.
All right.
Really, at the end of the day, I think HealthScope has to at least open up the
kimono.
That's it. Kimono. Lift the skirt a little bit and let them in, and then let them see how they can go. Because you know, we saw the share price after the last bid started falling, and now obviously it's come back up again. So
all right, bit more of a premium now for everyone to think about. Okay, now 3 of the big 4 banks are going to be got their big annual profits next week and the week after.
That's right. ANZ
what's
Wednesday.
the expectation? Yeah.
And then I think we've got NAB Thursday. Look, the expectation is that these guys are going to have to start coming clean with the Australian market, and they're going to have to start saying, you know, this is the issues, and talk to us about what's going on. This is the chance for the banks to really come out. I think profitability will be fine. I think the cash numbers, net interest margins are going to be okay. I think all of that, because we're now looking back a quarter.
So what do you want to hear from these leaders?
Well, I want to hear how the Royal Commission, what's happening with that, what the costs are going to be, because we've sort of got some quantified costs, but we don't know what that final number is. And I really want them to come clean to the Australian market and to their shareholders to say, yes, times are going to be tough, and if they can maintain their dividends. And that's why we've seen NAB being sold off so much, is because we don't think that 99-cent dividend is going to be able to be held.
Adam Dawes, very interesting. We'll follow that next week. Thanks so much.
Have a great, thank you.
Quite a week. That's all for the show tonight. See you again on Monday night at 5 p.m. on Your Money, Channel 95, or tonight on Catch Up at 8 p.m. on Channel 604 on Foxtel. Thanks for your company.